what do you see as the biggest driver? How do you rank them?
Well, I think in the short term, as we all know, it's all going to be what's happening with COVID. I mean, that's where, people's attention is being focused. We're seeing a lot of places in Asia where the rollout of the vaccines is going slower than it is, in Europe and in the US. So that is going to be the headwind for now. But as we move into the medium term, I think what's really going to be the drivers here is going to be what we're seeing from, the regulatory crackdown on the tech companies, and then earnings.
Then earnings. So when you say what about the regulatory crackdown? Are you talking obviously about China? So much has been done. It almost seems like the markets are kind of getting used to China step by step, methodically reining in different parts of the economy.
Yeah, I think that's right. I mean, you sort of say China, but this is a global phenomenon. We are seeing it happening, around the world. But obviously in China, it's happening a little bit faster. And as you said, we're seeing these clear steps along the way. So from what we've seen so far, I think in terms of the antitrust and the fines that have gone through, the market has largely come to terms with that. The bigger question is what's going to happen in terms of the access to the data and things like that. So, if the data becomes more of a public good, then that's going to change the long-term sort of earnings for these sort of companies over time.
Joshua, we've already seen this theme start to play out. Of course, bonds up and stocks are trading down as we see the Delta variant kind of wreaking havoc across the world, right? I want to take us to our question of the day, which really asks the question of which asset classes look to suffer the most if we continue to see the Delta variant, but also if we continue to see sustained inflation.
Yeah, well, I think they're sort of slightly different. So, I mean, clearly, the countries that are being hit by the Delta variant, and, we've seen this in ASEAN, for example, where you don't have the offsets coming through from fiscal support and from transfer payments, they're going to feel that pain for some time. It's going to really impact on what we've seen from consumption. Inflation's a little bit different. I mean, I guess from our perspective is we're happy to see a little bit of inflation come through if it's being driven by the sort of the growth that's coming back into markets and that sort of reasserting itself. Clearly, I think the beneficiaries in that are going to be a bit more of the sort of value-orientated plays. Clearly, on what we would call more of, like value with a future, are those companies that have the ability to, have barriers to entry into the businesses that they have, and they have that ability to put or push those input costs that are going up back into the market, and that's what's going to protect their earnings. I think clearly, other parts of the market where, you're starting to see the discount rate sort of like ratchet up as a result of that inflation, they're the ones where they're going to see a bit more of that pain coming through.
Joshua, we heard from an increasing number of corporate leaders, but notably PepsiCo's CFO talking about inflation. I want you to take a listen if you can.
I'm not going to assume it's going to be transitory. I'm going to assume it's probably going to be around for a little while. And then we'll build our plans around that. If we happen to get surprised with inflation lowering itself more quickly, that's great. We'll adjust to that. But right now, I'm assuming it's going to be with us through the better part of next year.
So if corporate leaders are assuming that inflation may not be transitory, does that have an impact on your earnings outlook?
Yeah, absolutely. I mean, I think this is where you really have to go through the companies you're investing in and ask yourself, who are the companies that can benefit from this? And we've seen like some of the commodity plays, for example, are in a position to benefit from that. But then secondly is, who are the companies that are going to see their margins, narrowed by these input costs that they're not able to put onto their customers, and who are going to be able to? Clearly, consumer good companies that have strong brands are in a much better position to pass those on. But that question is going to be important. It is going to be some time until we know how transitory or not inflation is going to be. But if we do start seeing it like seep into things like wages, particularly in the Western markets, then it will tend to be a longer term issue.